Good morning, traders. It is Friday, April 25th. Yesterday's video, I noticed I said Tuesday. I don't know where that came out of my head, but it is Friday, and hopefully everybody's going to have a great weekend. Hey, and just a reminder, if you like these daily videos, make sure you subscribe to the channel. Almost 40% of you aren't subscribed, and if you subscribe, you're going to see me on your stream. You're going to get my updates, notifications. You're going to get all of that stuff. And of course, it just lets me know you like what I'm covering. And of course, I'm always reading your comments and replying to those and trying to cover topics and questions you guys have in future videos. But let's take a look at the charts this morning. We've had obviously some interesting price action. The markets today are trading slightly negative. The SP 500 and NASDAQ are down the least, or down 0.2%, while the small caps, Russell 2000 is down the most, 0.9%. More or less, we've got this bearish pattern kind of moving up. We've had some FOMO, which if we take a look at our FOMO indicator here, we saw a big FOMO trading on this day here. We talked about how that was most likely going to carry over to a gap higher, and then a flush of everybody piling in at the open, and then the market was probably going to go the opposite direction. Now, there's a few things that came to play there. Not only was there FOMO, which created the gap, and then there was FOMO at the open. And then, as we know, gaps get filled. Generally, most of the gap gets filled, and the price faded down. So that's kind of where we are. We still closed with actually a level of a reading over 3 for FOMO. Anything over 3 is considered more or less panic buying. People feel like they're missing out on their rally, and then we have this panic selling indicator where everybody feels like they're missing out, or sorry, that they have to get out. The market's going to crash, and these usually create the standout lows in the market, these spikes. And again, FOMO, if you take a look at these FOMO spikes, they are short-term moves. This was another little one here. It pulled back. It lasted a little longer. We had another one over here. The market pulled back. I've gone through this many times, and I do need to clarify a couple things, because some of you are saying, well, we had FOMO. Like if we go to the SPY, for example, or even the NASDAQ, we're like, well, we had FOMO here. Why did the market push higher yesterday? Well, we had FOMO. Let me just clear the screen. If we take a look, and of course we've got this reading of 3 across here. Just move this line. This blue line is our FOMO indicator. So more or less, we had FOMO here. We talked about how it was most likely going to carry over for a gap higher, and then a little push with everybody piling in, and then we're probably going to see that market kind of come back and fade down a little bit to fill that gap and to ease itself. And we did have that. Keep in mind, this is a 30-minute chart. These waves of FOMO and panic selling are very short-term momentum plays. They only last a few hours. Potentially, they drag out a couple of days. They're momentum. It could be a day, it could be 3 days. These are very short plays. So some of you, I've noticed comments, you're like, well, we had FOMO. Why the heck did the market rally yesterday? It's up huge. What's going on? This makes no sense. Well, we had 2 days of FOMO in the gap, and we had the pullback. That's it. That was the FOMO move. FOMO is very short-term waves of emotional traders chasing or dumping shares. And so now we've kind of done the same. It's pushed back up. We've got FOMO yesterday pushing higher, and that is starting to turn into a little bit of selling today, moving down. Here's the other big disconnect is we have huge mixed signals in this market right here. This market could, as I mentioned, pop like 13%, or it could drop 13%. And when we're in this wild market condition, we stand on the sidelines. And so these short-term moves are just telling us, hey, expect a gap or a fade or a squeeze or whatever, short-term movements. And the longer-term chart is still saying it's total kind of chaos at this point. And we need the markets to strengthen and firm up before we want to take any action. And the fact that the daily chart tells us things are random, the short-term charts just show us short-term kind of swings. I don't know if that clarifies things, but it's very important to distinguish the difference between these. I am hoping in the next week or so here, in the next 5 or so days, to start creating some really good educational videos on identifying trends, how to set up panic selling and FOMO indicators on the charts. Again, these panic selling, FOMO indicators, and even these overbought signals here, like where we can identify. It's hard to see it on this chart, but we have these SSs, which are sell shorts. These are little peaks when we're in a downtrend, telling us when we should see pullbacks. in the market. We had another one over here. We had a pullback. This 30-minute chart is stuff that I share in obviously my book. Hopefully many of you have read this. The book where I provide that is right here, Technical Trading Mastery. We've had a lot of members talk about reading this, really just answers so many other basic trading questions and understanding the realities of the markets. They help you set the proper expectations. So if you want to know how to set that up, Technical Trading Mastery book, there you can get it. And then, of course, longer term investors, if you read our comments and testimonials on our site, if you read the book Asset Reinvesting, if you like, we really do only have one shot at a good retirement. This is the key. If you understand asset reinvesting and slow your metabolism down, slow your adrenaline down of trading, and be like, okay, I want to grow my wealth in all market conditions, not have to worry about a bear market. In fact, if we can grow our money and protect our capital during chaos, that's what asset reinvesting is for. And that's what we're doing with our core strategy here. Again, Technical Trading Mastery is kind of showing you how the markets move and setting expectations. And then this is really the asset reinvesting is like how we go about doing it with our signals here in the newsletter. So my goal is to start creating some really good educational videos on how to identify some of these shorter term trends and things like that that are in the Technical Trading Mastery book. I know a lot of you are dying to figure out how to do this and apply these little formulas and setups to TradingView and other platforms. So I'm going to be doing that. My family is in Florida for the next week. I have stayed back. I'm just going to kind of get the house and the yard ready for summer and put in some time creating some educational videos and get everybody up on the same page. The more you understand and feel the daily ebbs and flows of the market, the more relaxed you get, and you get a better understanding of how all of that goes. So jumping into the next thing here, where is the money flowing? Well, at this point, it is coming out of stocks. We are seeing money rotate into bonds. We're seeing bonds trying to put in a little bit of a double bottom here. Obviously, we had a big unwinding. Now it's trying to figure out some traction. Again, it is in a short-term downtrend. When these bars are red, it means the momentum is down and sellers could very easily step in. So the big question with bonds, we have this move down, and is this a bottom or is this a bear flag before it has another big leg to the downside? I've talked about how bonds, TLT, this is not TLT, but same thing. TLT could drop roughly 7-8% very easily, I believe, and carry a lot of downside risk. Obviously, if that happens, we would see another lower low. We'd break these lows, and that will really send investors for a tailspin. You can see TLT just actually 2 trading sessions ago gave a sell short signal. It was in a bearish phase. It had a big gap up and above the 20-day in a downtrend, and of course it quickly sold off. It's crazy how quickly some of these moves are. Like just for bonds, it was a 2% move just in a day on these momentum type of kind of setups. And not that we trade these, we just want to know what the short-term momentum is doing, and that allows us to digest and understand how volatile things are for our investment capital, that we don't want to get into bonds at this point. Obviously, we're focusing on asset reinvesting and managing our long-term wealth and growing our entire capital, not playing the pops and drops and news-driven moves and things like that, specifically with this newsletter. So if we take a look, we are seeing gold down again today, down 1.4%. We have seen a pretty good pullback in the price from the high. We hit that 100% measured move that we called a few days ago. We had this pop up and this super tight little pullback. And of course, gold, if we just look at the Fibonacci extension, it came right up. Oops. I can't get that to stay. Here we go. Sorry, guys. When I try recording with Camtasia, it messes up the indicators on my charting platform. Anyway, we came up to 100% measured move, and now we're correcting. This little pause that we have going on right now could be seen, I see it as a little bit of a bear flag. If we look at the big picture here, when gold came up and hit our major long-term target here at 2750, that 2800 area, we saw that big bout of selling, and it went into a little bear flag here and then dropped, and another little bear flag here and then dropped. We just hit a 100% measured move just based on this. Typically, whenever we hit these 100% measured moves, There was another little 100% measure move I think we had right here when it hit, and then we had this tiny little bear flag. So I wouldn't be surprised if this here turns into another bout of selling. So technically, I wouldn't be surprised if gold moves down to very short-term analysis. Sorry, I'm having troubles with this silly indicator here. We could see gold pull back even further from yesterday's close. If we just use that, we could see gold down about 6%, you know, in a few sessions, really. That's the downside potential and volatility in gold, which is huge volatility for gold. Usually it's a slow slug, snail, moves super boring. People don't want to touch gold because it's kind of a slow asset, but gold is definitely in a volatile stage, in what I consider a blow-off phase. If you notice the volume, though, we have huge volume to the downside for gold. There's been the big selling spikes happen to be sellers, big selling volume, even though the price has been going up. So there's people unloading shares, which is what happens. We see the masses pile in, and when things get really exciting for the masses, it's usually institutions. The smart money starts to rotate out. If we look at the 10-minute chart of gold, just look at the volume bars over the last little bit here. The big volume bars, and this blue line right here is the on-balance volume. Sticking that up, you can notice the on-balance volume is heading down, meaning on average, volume is flowing out. The sellers are dumping shares. The big red volume spikes are telling us there's some distribution selling going on. The 10-minute chart here of gold shows, this is the daily chart that we just looked at with that potential bear flag we're talking about. And now you can see it's already started to move down. It has a small bear flag this morning. And, you know, it might head back down to the low from a couple days ago. And then, of course, keep on going even further to the downside. So what was that downside target? 31.45 is the potential downside target for gold over the next couple of trading sessions. I wouldn't be surprised if we hit that at all, although that is going to, for some reason, catch so many people off guard because, believe it or not, the volume that's been going on in the ETFs and stuff, everybody's just is piling in right here, and then suddenly gold's going to go back down below. Let's just check out GLD. GLD shows us huge volume compared to normal. When you see massive volume, that's when the herd, the mentality, the masses are piling in. I think that we even did this with the BOTZ ETF. We had a lot of members say, hey, let's get into BOTZ. We need to add this to our list. I'm just going to go back in time here. And where was it? I'd have to zoom back, and I think it was right here. I think we saw, it was somewhere right in here. We saw a big volume surge. Can't remember actually exactly when that was, but there was a big, I think it was right over here. We saw a big move. Money was flowing into BOTZ, huge surge, and more or less people kind of pile in all near the upper end, and then of course it breaks down, and everybody's underwater when they pile into this phase, and then it really never gets back. It gets back to break even, but never continues to really go higher. So there's difficult. The volume always kind of shows us that. So one of our members, Carl, he shared this chart with us, which I thought was really interesting. He always shares all kinds of great insight in the members area. But this is Traders plowed $6.6 billion into leveraged long ETFs. Look at the giant inflow. That's I think this is a weekly inflow. That's 1 week, but notice all the previous weeks. It's been a month and a half of massive inflow. Everybody's picking a bottom, it seems, and they're using leverage to do it. And this is usually what happens. And I talked about this a while ago. I called them out. I'm like, if you're a bottom picker, this to me is like people are bottom picking. When people are picking a bottom, it usually means the bottom is not there. So this is like kind of like the perfect trader who's, you know, emotional, and they're like, markets are sold, they're going to go higher, this is an opportunity, I'm using leverage. And of course they take the leveraged ETFs and they bet on the markets, and then of course if this isn't the bottom, then the market breaks down and they lose a crap load of money here. And if we actually go and take a look at the stage analysis, I believe we're still in this kind of stage 3 topping phase. We haven't fully broken down, as I showed yesterday on the charts with the RSP, IWM, and IWC ETFs blended, the broad market. We've put in a major double top. I believe we're still in this topping phase, but we're going to go into a stage 4. And everybody's trying to pick a bottom. This is the complacency stage. This is where I believe we're at. People think this recent pullback is like the start of a new bull market. I see it everywhere. People saying, we're going to new all-time highs, we're buying leverage, we're seeing all this stuff. And they're complacent. They just think the market's cooled off and the next rally is coming. But once we start to break down, all these bottom pickers and these people who just believe the market's always going to go up are going to start to have some anxiety. And then once it starts to drop enough and they lose another 15 to 20%, and they're, especially if they're using 2x ETFs, which is like 20 to 40% of your portfolio gone, they start to go in denial. They cannot believe how wrong they were and how the markets are going down. And they now feel like they can't get out of the trade because they're down so much. They're just going to have to ride it out. And then the market keeps going down. And before they know it, they're down 50 to 75% in their portfolio. And then they realize if they don't get out, they're going to lose everything. And then they panic and there's depression and they're out of the market. And us as technical traders experience the exact opposite. As people get anxiety, we're getting optimistic. We already are optimistic. We're excited because I think a bear market is coming, a financial reset. And while it's going to be difficult in the short term for a lot of people, and even our home prices and stuff like that, it is an opportunity to not only protect our capital, but to profit from a falling market. And then, of course, as these people are in denial, we're in we're in full-on stage 4. We'll be making money. And then, of course, there'll be the big washout low as selling off. It'll be the thrill and then euphoric phase, which is, everybody's panicking and has anger, depression. We'll be knowing the market's starting to get the bottom. We'll know most of the downside is done, and then we'll be ready to start this whole thing over here, the actual bull market, to the upside. And that's what we focus on, is we get to experience this exciting phase twice, on the way up and on the way down, which is pretty priceless. And in the grand scheme of things, we are in this peak maximum risk. Almost everything right now, to me, has got a lot of risk to it. Even gold. I mean, I know gold's been on fire and we keep drawing new upside targets as new legs continue. But if we do go into this financial reset, stage 4, gold is most likely going to pull back. Is this time different than the others? I don't know. It always feels like it's different, but you got to still follow price. And I do believe gold will eventually get sucked down with the markets, like it pretty much always has, to some regard. And once it's had that bigger pullback with the financial reset, then gold and miners and silver will become an amazing opportunity for them to scream higher and do very well for a long time. All right, last but not least, Bitcoin. We've had a bunch of people wanting to know a bit more about Bitcoin, what's going on. As soon as Bitcoin starts to go up, everybody does get excited. But anyway, we do have an interesting price action on this chart unfolding. We've had, it's had a little double top, it's had a flush down, and now it's popping. This is a pretty high momentum move that we are seeing right here. It is kind of bucking the trend. We've got the strong run up with some volume, and it's got this tight little pattern. It actually feels very similar to this one over here. We actually traded this when we got in right here. We sold half of it, our position out at 14% gain a few days later. We sold the rest out right at the top at 108, which we nailed. And now it's kind of setting up a bit of a momentum play. And what's interesting is while it looks like it might actually want to pop and really run, and if it does without me, that's perfectly fine, because I still think it's a higher risk trade. But if we take a look at the monthly chart, it does have that big monthly pattern. So we played this first. Well, actually it's right here. We played this first move. We saw this giant bull flag pattern forming, and it started to move up. We got long and we played the move here, and we got out over here at the top. Well, now it's setting up it's an uglier looking bull flag. Definitely not as clean as this one looking at this point, but it is flagging sideways. It's come to life. Again, you can, if you were to read between these bars, you can see there was a big topping phase through here, and then it broke down, and it still is kind of, stuck under some resistance. And we've seen it both times. We saw a big drop here, and then it gapped higher over here, and it's got sold down again, and it's back up to this resistance area. So this is definitely a critical level. If it can pop, I think we could see it push back up to the 100K or plus area. And then the question is, how is it going to handle this little cluster of volume up here, and is it going to start another big leg to the upside? We'll just have to kind of take it one bar at a time. This trade here was a beautiful 40% gain in a very short period of time. As soon as we got in, it just took off. It would be interesting if we get something like that again, but at this point, I just don't feel we're still a little bit stuck under resistance, and it needs to start to eat up here and show signs that it's looking like it's going to pop and run, and all the masses are going to drive it up just like we saw over here. So there's no signal there yet in terms of a discretionary trade in Bitcoin, but it is building a pattern that could have some pretty good potential. All right, well, that's a long video, 20 minutes. I think we'll call it a day there, and talk to you later.